Hello traders, here Chris Capri, secondskiesforex.com. So I want to share a live price action trade that I'm in with you right now. This is actually a trade setup that we had posted in the members commentary, trade setup commentary in our price action course on Sunday. And it activated on Monday, and here we are on Tuesday, and it's well into profit. And so I want to talk about this trade in terms of trade location, in terms of stop loss placement, in terms of take profit, trade management, and kind of give you the overall price action context here. Now, just to make sure you know, this is a live trade. You can see this is an open position right now. This all matches. And also this says real right here. So FXCM, if it's a demo account, that real will say demo. It will never say real. So you know this is a trade I'm in with my own money right now, that I only trade with my own money. And so with that being said, let's talk about the price action context first. So as we can see, the pound dollar has been relatively in a corrective structure range that's about 250 to 300 pips high, from 155 down to 152. Now, we had an impressive bull run, an 8-candle bull run into 155. But then what happened with all that bullish momentum? It ran into the big figure at 155, and it kind of triple tapped here, suggesting that the offers are willing to hold the line here and kind of mount a challenge and stop this momentum. They were able to eventually reverse the momentum and show with strength that they could push this back down, and they did, 250 pips. And you can see the strength kind of coming in a typical impulsive corrective structure here. So we had a relatively good idea in terms of trading location at 155. And so we said, okay, we literally on Sunday said, look, we're going to looking to sell. If you're bearish, you want to be selling at 155, and we don't need a stop loss, a tight stop loss on this. We feel that the corrective structure is going to hold, and because the offers held 155 very cleanly, which you can see here with the wicks all around the same height, we don't need a tight stop loss. If the wicks were much more varied, a short, a long one, and a medium one, then that would show not only volatility, but a wider range in the depth of the order book around 155. Therefore, we would need a much tighter stop loss, but we didn't have that. We had a very clean reaction from the offers here at 155. So we said, okay, we're going to look to sell 155, and you don't need a tight stop loss. We actually placed ours 34 pips above, which you can see here, stop at 155.30. and an entry at 54.96.9. We literally ended up top ticking the market. As you can see, the high was 154.97. So by 0.1 pips, we got literally the best entry by 0.1 pips. That's not common. It doesn't always happen that we get that perfect entries. I literally missed another trade today by a pip. So, you know, that's just going to happen. That's part of it. Sometimes you're going to get these little gems that hit perfectly. But when you find good trading locations, you should have relatively, good entries near where the market stalls and turns. So because of that, because of this reaction here, we can have a tight stop loss. You shouldn't need a large stop loss if you find good trading locations. Now, in terms of our target, the offers that held here at 155, they pushed it all the way down to 152.50 before some impressive bullish momentum came back in the market. And the change of hands happened here. So we're expecting the bears to try and target this. If they're going to show that they have equal strength in a market, then they're going to want to at least tag this and say, okay, we can push you back to where you started. So that's our target. We do see an interesting roll reversal level here around 53.75. So you can see this is an interesting roll reversal level. The market might get stuck here, and if it does, we may take some profit and neutralize all the risk at that point. But if we get below this here, then I see relatively clear or smooth sailing down to 52.50. So that would be a 250 pip profit on a 34 pip stop. So we're talking about a plus 8R. Briefly, I want to talk about the entry in terms of how we place the entry and time and everything like that. So, and then we'll wrap this up. So to make sure we didn't place any confirmation price action signal. We don't wait for confirmation price action signals. Those lower your accuracy, they lower your profitability, and they give you worse locations. There was no pin bar in the 4-hour chart. There was no pin bar on a 1-hour chart or anything like that. And on the daily chart, there was an interesting one here, but assuming you got the 50% retrace tweak entry, you're not getting until here, so you're missing this. Now let's be generous. Let's say you absolutely top tick the daily candle today and you got an entry. Where's your entry? The high is 54.45. Your stop has to be above 55 now. So you have a 55 pip stop with right now about a 70 pip profit. You're barely up 1 R at this point. We, on the other hand, got in at 54.96 with a 34 pip stop. So while you're just cracking your first plus 1 R, we're already got 4 times the profit as you do. So you can see how waiting for confirmation price action signals reduces profitability tremendously, in this case by 400%. And it gives you a much larger stop loss if you do it waiting for a confirmation price action signal, and you might have even missed this trade completely. So it lowers your accuracy and it lowers your profitability massively. So that's very important to note. Lastly, you shouldn't have to be waiting for 2.5 weeks for a trade setup to materialize. If you have to wait 2.5 weeks for a trade setup to materialize, then you're not reading price action. You're not trading. You're missing opportunities like this all the time, because these happen quite a lot and way more frequently than 2.5 weeks. We aren't waiting for that long. We posted this on Sunday, it hits on Monday, and we're already well into profit, not only on Monday, but on Tuesday as well. So if you're having to wait around for 2.5 weeks to find good trade ideas, then you're not reading price action correctly and you're not actively trading the market. And if you're not active, you actually slow your learning curve and you actually make it harder to build up your skill set. So these are a couple points we kind of want to mention and make sure you understand. Now, if you are interested in learning how to trade price action the way we do, then make sure to check out my advanced price action course, where we'll teach you how to find premium entries like this, how to read the price action context properly, how to find trades that you don't have to wait around for weeks on end, and how you can get better stop loss placement and higher profitability on the same trade ideas. So if that seems interesting to you, make sure to check out our price action course. Also, make sure to come by and check us out at secondskiesforex.com, where we post market commentary and trade ideas like this as well, along with a bunch of other free articles and videos. Other than that, I hope you enjoyed this video. I hope you enjoyed the explanation of this and the demonstration of how I trade and what I teach to my members. So with that being said, I wish you good luck in the markets. Make sure to comment on the video below and what you got from it. And other than that, I wish you good health and good trading. Take care, everyone. Now, in terms of my target, it's at 98.25, and that's the most recent spike highs. So assuming that the bulls are going to continue to maintain this range, at a minimum, they should attack about this high right here at 97.50, which would still offer me about plus 4R. But I'm gunning for this one here, expecting that it's going to try and make an attack up here. And that would give me about plus 5.5R. In terms of trade management, in terms of scaling into positions, I'm doing this with live trades on my own money right now. So this is how we trade. This is what we teach people how to trade in our price action course. And so I know a lot of people have shown textbook examples of how to pyramid trade, but they've done it with charts in the past tense and they've never shown their live trades. I'm showing you how I'm doing it with live trades, with my own money in real time, and how I exactly scale in the position. Not some perfect looking charts. No, how I'm actually doing those.